Good morning, everybody. This is Mark. We're back here for the morning call. It is on Monday. It's going to be an abbreviated Monday. We're closed for the holiday, closing at 1 o'clock. So I would expect light volume across the board. The action will be a lot of inaction. But you got to be here. The market's open, and stocks will trade accordingly. So we certainly got put with a little bit of a doozy on Friday morning with, Thursday night's action that there was really, quite frankly, no reaction. No resolution seems to be in the picture. We're getting maybe a little closer. Futures were down. Futures reacted hard to that on Friday. But I got to say, at the end of Friday, the S&Ps were certainly down a lot, but a lot of the leading stocks recovered very nicely. And I don't think there was a lot of damage for the stuff that we've been playing and we've been talking about. There really was not a lot of damage, and quite frankly, there was some opportunity to get involved at some cheap prices on some stuff. I'll put up the indices so we can just see where we're at. The spiders, they did bounce off the 100-day moving average. They're right now above the 21-day, which is around 142.79. It's roughly about unch today. I think they could just, at this point, unless there was a resolution, they'll probably just waver at this point around here. Maybe they get a little bit more downside, certainly as we get closer to New Year, that there is no resolution. But, keep it in mind, not really bullish, not really bearish, but still contained. That's how I'm looking at that. For now, Qs bounced off its 200-day, held. We'll have to see if that remains. High beta still is, not a little erratic in my opinion. You certainly don't have the leadership from Apple, but Google's still hanging in there. Amazon's still hanging in there. But then you have, Priceline wavering with a $40 range, and it's definitely challenging. But overall, the NASDAQ's hanging in there. Again, not particularly bearish and not particularly bullish on it either way. Just looking at key levels, which is the 200-day moving average. Then finally, the IWMs. I like to recognize the Russell 2000. That's actually hung in there the best, recovered very nicely, and quite frankly, looks like if we're gonna go to the upside, this is probably gonna be the first one that breaks the upside, and possibly a move to 86 will be in the cards. So certainly keep that. That's obviously mid-cap stocks are in that indice, and it's a little bit more broad-based. So keep that on the radar. Not always the stocks that you'd be thinking of. Overall, what held in there? Well, we were talking about, there was 3 trades I was talking about yesterday morning. Goldman around 126, 125 ideally, if it got down there. I was talking about, I believe, RIM possibly as an opportunity to buy. It was an opportunity. And then the VIX is an opportunity to short right at the 50-day. So let's start out with Goldman Sachs. Held its key moving average on the 8-day moving average, went as low as 125.63, closed at 128 and change, and went all the way to almost 129. Held in there like a champ, traded fine, still contained, not much different than we've had the last few days, a little more back and filling, and it looks like it's going to make new highs again. Yesterday was the buy. I don't know if there's going to be a trade in it today. And you can look across the board with JP Morgan, same type of trade, not as exaggerated, but came down, buy an opportunity for us to make some money. BAC held roughly to 11, doesn't move as much, but still contained. And then you had GE, which I've been watching. It's on my radar. It got hit after actually it announced increased dividend and I think revenue guidance. It bounced roughly off its 200-day moving average. So maybe this, roughly around 20, 50, 21 is a chance to get involved with it. Still not great, but it's certainly on my radar. And even for Visa and MasterCard, very contained after pretty decent days on Thursday. So they're on my radar, but I don't think there's a trade for us to necessarily take advantage of today in the financials. But it's certainly, I like that they remained intact. And to me, that's shown strength. That should continue to show what I've been talking about is their continued bids in the market in selective issues. High beta, we'll talk about for a few minutes. Apple, again, gap down. It's now held, that 500, 505, 510 a few times. It's up about $5 today. I don't really know why. But it's trying to recover off its 8-day moving average. We'll see if that gets a chance. It really has been below there now for a better part of almost 2 weeks. If it can recover from there, the next buy point is probably 535, which would be breaking a descending channel, which is, again, bullish. But still a broken pattern. Until it gets above any of those price points, it's just a trade. and it's just flopping around at this point in time. We'll have to see if it's going to form a bear flag or a descending channel, which again is bullish and probably will give you, some new buyers coming in. I'm not sure if that's going to happen by year end, but it's something I'm always watching. Google, seems like 700 is that buy area. Got the 710 yesterday. Again, you can always trade it. It's always going to move a few points every single day. It's just a matter of you want that perfect price point if you're really going to be involved in it. And right now, it's just wavering back, forth, back, forth. Nothing for us to look at. Amazon, same type of play. I think it holds the breakout price of roughly around 256-ish. So every time it gets close to there, I'm looking to get back involved on the long side. And if it gets back to 260, 262, I take some trades off, at least from a trading perspective. It's intact on a longer term, and it still looks good. And it just really needs a bunch more days of back and forth before it really is going to decide that it's going to go higher. Obviously, if there's some resolution, it probably goes higher a little faster than that. Excuse me. On the other front, a few other fronts, some of the retail stocks actually held in there pretty nicely. I'll start off with Coors. It broke above some key levels, 2-month highs on Thursday. Obviously, it gapped down pretty big on Friday, but recovered very nicely off the 100-day, and right now it's intact. Again, seems like it's always buyable around 52-ish at this point in time, and 55 is a little bit of resistance. Same thing with Lulu. I like going after the best in breed in retail if I'm going to look at it. Not really a trade for us on Friday, but it's something. If it gets down to 74, 73, I'll probably get back involved. If it hovers here at 75, it's something I'm looking at. And I've been talking about UA for a little while now. Not the best pattern, but it seems to be holding the 46, 47 range. Gets back above here. I think 52, 54 is in the cards. And Nike, a lot of it might have been a catalyst. Nike was possibly the catalyst. Good earnings, and obviously a decent trading stock for us. Not a whole lot of movement intraday, but enough to make some money, and it was a strong retail. It looks great on a technical chart, at least on the bullish side. Let's talk a little, bearish for a second. RIM, drastic move. It's funny. Everybody from CNBC, we've been involved at $8, $9, and obviously a nice trade from 12 to 14. I was out of it into earnings. I was totally out. Back to 12 was a fair price for me to buy, and actually intraday it moved from 12. I'll just put my 8-day up, and all the way to I bought it around 1150, 1180, went all the way to 1250, and then just came straight in from there. I took a bunch off, but I still have some. I still think this area is roughly the area I want to be involved with it. I think it's now going to be a little bit more time, so my adding, I don't think I'm going to be doing a whole lot of it, but it should hold 10. That's how I'm looking at it. It should hold 10. But it did some damage yesterday. Huge volume. That to me is a bearish pattern. But understanding that there's a lot of people in that made some really good money. It's still down. It's still a beaten up stock. Needs to be on the radar, but it's not an A trade anymore. And you move on. One idea I was talking about on Friday, and again, it's just you get a few ideas, and that's all you really need to take advantage of the VXX. We were up, I think, 32% in the VIX this past week and a half. In this, 3-4 days up, VIX gapped up to 33 and change. 33.13. Decent little short. I think it's going to fill the gap back to like 30, 30.50, 31 in that area very shortly. So it's priced to go to zero at some point anyway. That's just how this vehicle works. It's a good hedge at certain times, but when it's up, 12, 15, 17%. It for me against the 50-day, it's something I'm going to be looking to take advantage of on the short side, and I did. I think you stick with it to beginning to fill the gap, and possibly that could be to 30. So certainly keep it on the radar. Nothing urgent in the picture across the board. I'm not really going to mention much commodity stocks. Oil stocks hanging in there. Nothing too exciting. OIH, Schlumberger, Exxon, Chevron. Not necessarily bullish, not necessarily bearish, but they're intact. Not a whole lot for us to do from a technical point of view. The casinos, you had MGM, which has had a really nice move from $10 over the last, 2 weeks or weeks. It's about $12, closing very strong. LVS hanging at the top third of its trading range, very difficult to trade, but something to look at. Same thing with wind, very intact, but nothing to talk about. Finally, gold and silver, just to mention briefly, still bearish patterns, broken patterns across the board. From a long-term point of view, maybe it's viable, but from a technical trading point of view, nothing's telling me that's the bottom. And quite frankly, if it gets up to 162 and change into the 8-day, or maybe that's the, what is that? Is that the 8-day? Into the 8-day moving average, has possibly a little resistance for new shorts. I'm not short. I have no position. So just some comments. Home builders and industry I always like to look at. Nothing for us to do at this point in time. But 3-4 days down, I do like to get involved in the tolls, the lens, the Rylands. I'm doing a little backwards. The Len is up right now, and the Ryland. But not a position at this point in time. I think that's the key, guys. We're getting into the end of the year. We still have the fiscal cliff looming. You can see what happens when the market reacts negatively to the news and wants to really do what it's going to do. I don't know if it's going to happen again, but it definitely, has been keeping me light. I know a lot of people are like, you're still in a lot of positions. I'm only in tier 1 in just about everything I'm in. So I'm in a lot of feelers that, quite frankly, are giving me an opportunity and a cue on which way to be. And they keep me involved in the tape. And that's how just how I like to trade. Not heavy across the board in anything, and I don't think you need to be. Not necessarily cash is king, because I think when there's some resolution, I think a lot of people are going to chase and probably miss the boat. But at the same time, nothing's telling me that I want to just say I want to be all in at this point in time, except buying pullbacks, buying at key levels, selling at key levels, shorting at key levels also. I think that's the way to take advantage of some of these trades. Lastly, I put an HLF because I think a lot of people have been trading it and probably getting hurt on it because for some reason I don't see a lot of people short it or hear about a lot of people short it, trying to buy pullbacks. It's a broken stock, and the guys who are it's very difficult to try to find a bottom of broken stocks with momentum, with big hedge funds, big money behind it. You wait. It seems like the money, you could be making easy money on the short side over the last few days, and now all of a sudden you keep trying to buy it. Again, the trend is your friend. Let the trend work itself out. At this point in time, I really have barely traded it, and that's going to be my play at this point in time, barely trading it. At some point, is it going to bounce? Probably, because it is oversold. But at the same time, it's broken, and broken huge volume, and obviously a catalyst. So keep that in mind. Slow day today, 1 o'clock. We're closing. Keep it tight. Do not do anything out of the ordinary. I want to wish everybody a happy holiday if you're celebrating, and enjoy the day off, certainly, and enjoy time with your family. I'll talk to you later.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.